What's up, guys, and welcome to another episode of KIO Macro. This was a special one. This might be Isaac's last episode with us as he's about to go and serve our country like a good old man that he is. We're going to try to see if we can offer him something to keep him around, but he wants to spend time with his family, which is understandable. So, Isaac, man, how you doing today, man? Thanks for jumping on, not just today, but all the time, man. We enjoyed you if this is the last time.
Yeah, no, thank you. I know it's unfortunately I want to spend time with my wife before leaving to I don't know, to God knows where for God knows how long. But I know I'm kind of selfish in that respect that I'm not going to dedicate more time to doing these videos. But
Family first, man.
Family first. I know. So yeah, but it's been a pleasure. I've had a lot of fun with these.
Nice. Yeah. We're gonna go ahead and get started, y'all, and we're gonna try to, have Isaac go out with a bang. We got a lot of good stuff to go over. A lot of things have been happening in the world of finance and crypto. So let's go ahead and jump into it. We're gonna start off with these charts here. All right, guys, per usual, starting with the central bank balance sheet. It's good that we have this cross here because whenever this is over, it kind of shows that this line continues to dip. And I've been kind of using this strategy a lot more and looking at it on a lot more charts. And it's crazy how accurate that it's been. We always hear about the death cross and things like that. But, we see this is coming down and we're near 2020 levels, central bank balance sheet. So that's good. However, we are still printing money somewhere. It looks like there has been an uptick. We have gold consolidating near all-time high levels. We're on top of our 62 EMA. The stock market has just been going crazy. And maybe it's because it's an election year or what, but it seems like every time we do another episode, there's a new all-time high being hit in the stock market. You got the Dow near all-time high levels. You got the NASDAQ near all-time high levels. You got, Apple. They had this big pump a few weeks ago or a week or so ago. And now it looks like it's starting to come down here. But remember, they're doing a huge stock buyback program again. And then if we look at Bitcoin, you can see that we are below our 62 EMA. We're at 64,000. A lot of people are calling we're going to come down to this 200-day moving average. I want to talk about on this episode, Bitcoin passing the torch to Ethereum. So I want to pull up a few things here. Bitcoin ETF buying volume has been slowing down lately. And if we just go back to the chart here, you can see that. So this green line is the day that the Bitcoin ETF started trading, the spot Bitcoin ETF on 1/11, right? It got approved on the 10th, started trading on the 11th. We see it kind of dipped a little bit. It went below our 62. And then we had this huge run up for I'm not even gonna go straight from the bottom, but just from when it got approved, we saw a 50%-ish run up, almost 60%. Now, going back here, you can see that in January, you saw the volume start to pick up, but then in April, we had our first red month, started to pick up again, but now, it's kind of starting to dwindle down. And then we just had another negative week, like our first negative week in outflows that we've had since almost a month and a half ago-ish. So that's not good. If Bitcoin is going to keep rising, there has to be new demand, and that new demand has to come from institutions because they have all the money. Retail isn't going to send Bitcoin to triple-digit levels. At least I don't think so. And then if we look here, you can see that we've had 5 consecutive days of Bitcoin outflows. And if we look here at the numbers, on those 5 days, we had outflows in the hundreds of millions. The 13th, 226 million. 190 million, 145 million, 152 million. And on the 20th, today's the 21st, so yesterday, outflow of $139 million in BTC. Now, the good news is there's a lot of good things happening in crypto. So we had a few metrics hit all-time highs. We have active addresses at all-time high levels, and then smart contracts deployed at all-time high levels. Smart contracts deployed just basically meaning new applications and projects being deployed as people are preparing for the bull market. And also you have Bitcoin and ETH being pulled off of exchanges. So you see the price here and then you see it just coming off of exchanges. And that's kind of showing, hey, people are wanting to hold for a long time. People usually put their crypto on exchanges to sell. So if they're holding it in their cold storage wallets, as a sign that they may be wanting to hodl for the long term. Now, going to Ethereum, you guys know we just had an Ethereum ETF approved, right? Now, the Bitcoin ETF got approved. The spot Bitcoin ETF got approved. Now we have a spot Ethereum ETF approved. Spot Bitcoin ETF got approved on the 10th in January and started trading one day later on the 11th. The Ethereum ETF got approved, what, like a week or two ago? But it hasn't started trading yet for whatever reason. But now the date where it's going to start trading is July 2nd, right? Now, we saw the chart on Bitcoin on what happened after the Bitcoin ETF got approved. Ethereum, I wouldn't be surprised if it did the same thing. And it's not as much capital needed to make Ethereum go to all-time highs because the market cap is significantly smaller. Now, I think that this could be a good catalyst to send us into the altcoin cycle that we've all been so patiently waiting and hoping for, because most of the altcoins are built on top of Ethereum. Ethereum is the most liquid crypto in all of DeFi. It's usually paired up with any token on a decentralized exchange when you go to trade back and forth with. So more good news. A lot of things are lining up for Ethereum. Isaac, you probably heard about this, but basically the SEC suspended its investigation into ETH 2.0. Ethereum is considered a commodity. Like, the SEC was trying to attack Ethereum and try to say it was a security, but they released this letter and said, and you got to keep in mind, they approved an ETH ETF. It wouldn't make sense for them to still pursue this. So they kind of put their foot in their own mouth. But it says here, we do not intend to recommend an enforcement action by the commission against your client consensus. So Ethereum is a commodity. So what that means is that a lot of institutions are like, whew, we can let our hair down. We can feel comfortable buying the ETH ETF once it gets approved. We're not gonna have to worry about any regulatory pushback. So that's a good sign. So I think, go ahead.
Real quick, just point on that. They haven't declared it a commodity. They just have said they're no longer going to be, as they say, like enforcing it as a security or pursuing that claim. I'd still say that there is probably a really good legal case to be made that Ethereum is a security. And that's, I was kind of shocked by this because I was kind of expecting the opposite to be concluded. But it's not, there's a difference between not being decreed a security or pursued as a security by the SEC and being a commodity. So we'll still need some, I think, classification, like legal classification on this. It's not totally out of the woods, but this is definitely a positive step in the ETH is a commodity direction.
I agree. And thanks for clearing that up as well. Yeah, guys. So I think once the ETH ETF starts trading, I'm adding to my ETH bag right now because I don't think the market has priced that in yet. 100%. I'm surprised ETH isn't at all-time highs by now. So yeah, I'm adding to my ETH bag. And, you know, I just purchased some altcoins with some cash that I had deployed on the sidelines actually last night, past couple of days, but last night. You see, you got the crypto market cap hovering below this $2.4 trillion level. So it's just some projects that I bought. Obviously, ETH was my largest pickup. I got some Radix because Radix is at all-time lows. You always hear about you want to be greedy when other people are fearful. It hurts to buy when prices are this low because your portfolio is already down a lot. But that is how life-changing wealth is created. Like, Radix has been building, their TVL is increasing. You know, pretty soon they're going to be on the Stargate bridge. So I think the price is not going to stay here, especially as ETH starts pumping. Bought a little bit of Pendle. Pendle has just been doing good. Didn't buy any Maple because I'm already really heavy on Maple. I did buy a good amount of Arbitrum. Arbitrum is at all-time lows, and it's the number 2 layer 2 in terms of TVL. Bought some Centrifuge. They are the number 1 private credit protocol right now, at least with the token. Above Maple, above Goldfinch, above Clearpool, you know, above TrueFi. But, you know, the price is not reflecting that. Like, you have some of these projects have hundreds of millions of dollars in loans outstanding, but, you know, the market cap is below that. And I picked up a good amount of Axlar as well, as it's, you know, dipped pretty low. And BlackRock has mentioned them on their website for their crypto initiatives. So yeah, I think it's gonna be a good summer. Isaac, what do you think, man? What's on your mind?
Yeah, I'm still kind of holding. I'm not sure what to say regarding the whole market because I've had my heart broken a few times already, and making assumptions on where the market's going is being increasingly difficult for me, honestly. Really, ever since the rate cut predictions went from like what was it, like 8 at one point? Now it's at 1. The Fed is only predicting a single rate cut this year, and we could even see that reduced to 0. So I'm very confused now of where the market's been going. We're in kind of unprecedented territory. I do have something, though, to say about legislation, groundbreaking legislation that has come down the pipeline called the FIT21 Act, or the Financial Innovation and Technology for the 21st Century Act. We love our acronyms here on the Hill. And this was a bill that did a number of things. It is essentially an act that is going to prohibit commingling of consumer and firm, customer and firm funds within exchanges. So you'll no longer have depositors having their deposits, mixed up with the firm's funds and then used for the firm's investments, quote unquote. This is what we saw.
What kind of firms are affected by this? Banks?
Any sort of centralized exchanges, sexes, basically.
Sounds like a revamp of the Glass-Steagall Act from back in the day.
Yeah, I mean, it's definitely going to apply a lot of those regulations onto the crypto sphere. Though FIT only really applies to sexes. They set up a DeFi committee, a research committee that is going to be a 2-study committee where there's 2 different studies that are going to be created. One is going to be created in conjunction with the SEC and the CFTC. And then a second study is going to be conducted by the Government Accountability Office. And if you know anything about these, government bodies versus the Accountability Office, they typically butt heads and have opposing interests. The Government Accountability Office often is going to be regulating and undertaking actions that are going to oversee government agencies, where government agencies tend to, have their own agenda. So the fact that there are 2 different studies being done on DeFi from what you would assume are oppositional bodies, it actually will provide a lot of, confluence and opportunity for either agency to kind of pick up where the other one is lacking, which is, good to see. But the actual act is not really going to do anything regarding DeFi. It's going to be basically just a centralized exchange act and apply a lot of just normal regulations that we already see in the traditional financial structure to centralized exchange in crypto.
Interesting. Okay. Man, I don't know, man. It sounds like they're trying to gear everything up for a good bull market here, but maybe I'm just biased and that's what I want to see.
You think that's what they're doing? I mean, maybe, I don't know. That might be what they're doing, I guess.
Yeah, I agree with you. It's good to have an idea as to where you think the market's going to go, but you also want to keep in mind that you could be wrong. And I'm fully okay with the fact that I can be wrong. And I have my portfolio set up to where, like, if I am wrong, I'm okay with the results, right? I'm in some good projects. And even if it doesn't happen in the time frame that I'm expecting, which is like before election, latest, I'm okay if it happens later, even next year, because I believe in this technology long term, and I believe I'm in some good projects, and I feel like I have a good structure. So you want to keep that in mind, guys. You want to have an idea, but most likely your timing probably won't be right, but that's okay. That's okay. Isaac, you making any? Did you do any shopping? You making any changes to your portfolio, or how are you moving in the markets these days?
Just kind of keeping the same. I have some Solana that I am sitting on. I did, though, offshoot some of it at a fairly high price, and now it's very low. So I'm just kind of sitting on the rest of it, waiting to just, kind of expel all of it. But yeah, I'm just kind of sitting. I'm a similar mind as you, though, where I don't really want to be in the markets past election day. I kind of foresee a run that is going to occur if and when we see a rate cut occur. If that happens this year, that'd be phenomenal. That'd be a nice run up in the market. But the market seems kind of overbought right now, just generally speaking. We've been hitting new high after new high. And I don't really see anything fundamentally in the market, though, that's causing this other than AI companies just going through the roof in evaluation. But everything else seems like, I feel like we kind of need a correction. And that's just kind of like a feeling. I think that post-election, we could see like a pretty, and maybe even before the election day, we could see like a pretty hefty correction occur. But that's just me. We seem very overbought right now.
A correction in the stock market?
In the stock market. In Bitcoin, I don't know. I don't know what Bitcoin's going to do. I assume it just kind of does what equities do with like higher beta, but it's not really doing that right now. So I don't really know. It's doing whatever it wants.
Yeah, Michael Saylor bought another what 700 million in Bitcoin or something like that. He now owns like over 1% of all Bitcoin.
Jeez, could he throw one my way? That'd be kind of
Right?
nice.
That's what I'm saying. Yeah, so Michael Saylor is still bullish.
And
Yeah,
that's all I need to hear.
that's all.
And that's it. All right, we're going.
Yeah.
Whatever.
And
Trump came out pro crypto.
I know. I saw
Trump's
that.
a big crypto bull now.
Yeah, he's really trying to get reelected.
Yeah, no, he is. He wants to win.
This is what Trump's thinking. Excuse me. I don't want to go to jail. I need the crypto votes. I love the crypto people. They're good people. I'm going to make crypto go through the roof. It's going to help the whole economy. It's going to help money transform across borders. It's going to be great.
He won me. There we go. That's all I need to hear.
Yeah, Trump did a full 180. He used to say that Bitcoin was hurting the dollar and all this bad stuff, but now he's pro crypto. I saw that Joe Biden vetoed some crypto bill.
Yeah, Joe Biden did. Joe Biden's very, very anti-crypto. Even Democrats are like upset with him about it. But interesting fact, this Fit 21 bill, which is liked mostly by the crypto guys, like it's been endorsed by a bunch of different crypto lobbying groups. And it was every single Republican, I believe, voted in favor of the bill. But only 71 Democrats voted in favor of the bill. And mind you, there's like 200 something Democrats, I think, on the Hill or something like that. So it was a minority position within the Democratic Party. And even though Bitcoin and crypto isn't, I guess, like explicitly partisan yet, it is becoming a more partisan issue. Republicans are far more receptive to like pro crypto arguments than Democrats are. Democrats have unfortunately, I think, adopted the Elizabeth Warren position on Bitcoin and crypto, which is that it's used by terrorists. It's like, it's bad. It's, gambling, et cetera, et cetera.
I've never disliked a stranger so much than I've disliked Elizabeth Warren.
Yeah. Yeah. She's been very, very anti-crypto. And it kind of makes sense with the Democratic position right now. Like Democrats are the party of environmentalism. Bitcoin, waste energy, right? That's a solid argument that even a lot of people in the crypto world kind of are like, okay, yeah, it kind of does. That's them. But also the thing that's crazy is the national security alliance and the Democrats that has occurred. Because there's a lot of national security interests that don't like crypto because crypto, it can be used for ransomware attacks, for money laundering, for this sort of stuff. I mean, it is true that North Korea, they operate mostly in crypto when it comes to their, ransomware attacks. Like North Korea does make bank right now by basically just doing crypto scams, and it's really hard to regulate. That's a very hard thing to regulate. And national security interests see that, and they have made an alliance with a lot of Democrats in order to promote that. Weirdly, Republicans not as receptive to that, even though historically the Republicans have been the party of national security.
Damn, no, that's a good point. I mean, I feel like there's so many other things that she isn't going after that's like way worse for the environment, like mining gold and fucking Christmas lights and video gaming. You know what I mean? So yeah, it's just like,
she'll probably go after some of those too. She does seem like a Grinch.
She really does, man. So before we wrap up, when do you think we'll actually get rate cuts, man? Do you think they're going to try to push it off until after the election?
But I got no fucking idea when we're going to get rate cuts. I have no idea. I don't know. Here's the thing. We go through phases in this cultural sphere where we feel as though the Federal Reserve just does the bidding of the president and is like, oh, the Federal Reserve does whatever the president wants, yada, yada. And then we also go through phases where like the Federal Reserve is a rogue agent. It does what nobody wants. The president can't even walk in the Federal Reserve, yada, yada. So it's like sometimes we feel like the Fed is going to do whatever the president wants. And if he says rate cuts before the election, then that's what's going to happen. And then other times, I don't know. Like, and the truth of the matter is that it is an independent agency. There is a lot of oversight in the sense where the president does pick the, the Board of Governors that then get approved by, is it the Senate, I think? So there is like a legislative and an executive check on it, but for the most part, they do what they want. Like they operate. There isn't any official mechanism for the executive to, strong arm the Federal Reserve. And this is a system that we've had in place since post World War II. Right? Like we haven't had an executive that can really exercise any sort of control over the Fed. So I don't know. The Fed's going to do its own thing. I think it's just going to be a month by month operation, like they're saying. I think every month they reevaluate. Did inflation go down? How are things looking? And if it doesn't go down, if it like stays about the same, or if it's not at target, they're not going to cut rates next month. I think that's just how it's going to work.
Yeah, we definitely thought they would have rates cut by now, but I'm with you, man. Only time will tell. You got to play it by ear, go by the month by month data, and just kind of see what happens. But what they're doing is good for the long term, at least, because if they would have hiked rates down by now, inflation would only be getting worse and worse. So,
yeah. Well, and there's a lot of dollar demand forces that may be exiting the scene soon. I mean, you heard that Saudi Arabia did not re-up their petrodollar agreement with the United States.
Yeah.
So they haven't, now nothing's really come of that quite yet, but there is obviously now more opportunity for like de-dollarization to begin occurring within the oil markets, which would be, that would have a massive effect on, dollar prices as demand drops. So we have to keep that in mind as well.
Yeah, that, and you have a few other central banks, the European central banks, that some central banks have already started to cut rates, and they're thinking that we were going to follow suit, and we're just like, nope. Which is kind of crazy when you think about it, because their inflation is so much worse than ours. So it's almost just like they're being little pussies and just like, oh no, we can't hold on any longer.
Well, no, literally they can't hold on any longer because ultimately we as the global reserve currency have a lot more leeway when it comes to our, monetary policy, because ultimately we know that like at the end of the day, everybody's holding US Treasury, like that's how most countries store wealth, is US Treasury. That might change, and it's starting to kind of change, but we're not at that point yet. So that gives us massive leeway in how we conduct our financial policy that European countries just do not have. And I'd say additionally, the inflation in Europe, I think, is a lot more influenced by resource prices than it is in America, where Europe's inflation is largely driven by the fact that they lost their one of their largest oil import markets, or like, exporters to them, which was Russia. They lost the Russian oil market and they had to then change suit. They had to figure out how they're going to get oil now. And because, other than like Romania, Europe doesn't really produce its own oil domestically, other than like a few places. I think there's some offshore as well. They don't have a huge oil production market. They're very much at the whims of other countries. And that has a huge impact on their inflation rates. Where in the US, we have massive domestic oil. I believe we're an oil net exporter. We have huge energy reserves, generally speaking. So we have we're a lot safer when it comes to the effects of, the price of oil on our dollar.
Interesting times in the markets, guys. Interesting time in the markets, but we're going to, whether Isaac is here or not, we're going to continue to try to give you guys the best perspective on the market so you can make the best decisions for your portfolios, for your families. But other than that, we're going to wrap it up. You guys send Isaac your prayers while he's out serving the country. Make sure he's safe. And, if this is the last one, man, we wish you well. And obviously the door is always open, man. We hope to see you before you get shipped off in August.
Yeah, thank you so much. And I appreciate it. I've, the audience is really what has kept me around for so long. I love the audience. That's you guys. You guys, I'm your biggest fan, really.
There you go.
That's
spoken like a true American. Well, hey, guys, we appreciate you. Isaac, we appreciate you. And we'll see y'all in the next episode.
Hi, fuckers. Yeah.